Welcome back to my final daily report market analysis video with me, Richard Perry, market analyst at Hantec on Thursday, the 4th of June. Let's have a look at gold now, which has disappointed in the last 2 or 3 sessions, really. I mean, if you look at how these candlesticks have configured, quite strong negative candles. And actually, if you roll back all the way to the breakout high of 1764, the candlesticks have all been predominantly negatively configured, haven't they? You've got these larger negative down day candles that have basically dominated the market when it's been trying to go higher. It's sort of fallen over, and again we're seeing that, and it's left a resistance at 1744, underneath 1753, and underneath 1764. So you're starting to see this sort of lower highs element, and also breaking below 1693 yesterday. It's now sort of formed lower lows as well, and it's broken this shallow uptrend. And I've talked about this shallow uptrend in the daily report because originally we had a quite steep uptrend in play. That uptrend then got broken, and we started to shallow out these uptrends, and it's got ever shallower ever since. And ultimately, we're sort of shallowing out ever more and more, and effectively that sort of suggests that the market has becoming range bound on a medium term basis. And you can see that through the indicators on the daily chart, where the momentum is sort of faltering at lower levels, especially on the MACD lines, which are falling as well. The stochastics have just crossed down around the 50 mark, and that's never all that great when that happens. So it sort of suggests that the market has lost its upside impetus. And possibly now range bound. So the fact that the market has ticked higher again today doesn't necessarily mean it's going to be going all out positive again. It just could be sort of mid-range noise effectively. I said on the report yesterday that the market had a tendency to find support between this uptrend, which was 8 weeks until yesterday when it got broken, and the 21-day moving average, this green line. That's now been broken, and you could argue that sort of 21-day moving average, which comes in around 1722, which is also incidentally the pivot line of the past month or so, or a pivot line of the past month. And it could well be that the market then starts to sort of falter around that, and you can see that pivot band sort of, you can broaden it out 1720 to 1725 on the hourly chart, where the market tends to sort of found turning points around these levels in recent weeks. Again, yesterday, having broken below it, it became a base of resistance again. So it is a basis of resistance overhead, 1720 to 1725. Interesting that 60 on the RSI has become a basis where the market's fallen over. So the market's up, RSI is around 52 at the moment. So got a little bit of stretch to go to the upside, but is this a point at which we start to see the market faltering again? MACD lines went way below neutral, in the process of turning higher on this little rebound intraday today. But is it a rebound that's just going to falter again? And if it does start to fall over, I think that would really suggest that putting pressure on yesterday's low again, 1689, and then possibly down towards what effectively are range lows now, so 1660 to 1668. So it's an interesting sort of deterioration of the positive outlook on gold, and I think that is something that we need to consider at the moment. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and click to gain some top trading ideas with our Trader Talks videos.